GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's dishing out crypto tidbits tastier than your grandma's forbidden cookie jar. I'm your host, Jay Hamilton, and today we're joined by Kyle Reidhead, head of research and co-owner at Milk Road. Now, in this episode, we are going to address something very important for all L1s, and that is a follow-up from our conversation a few days ago on Wednesday, which is in order for L1's assets to be successful, such as ETH or SOL, they need to be used as money within their ecosystem. Now, this is something that most people have trouble understanding because most people think about money, they think about buying coffee. That's not what we're going to talk about. I'm going to explain in this episode what we are talking about. But there's an important question that came up in follow-up to our episode and was also put into challenge the other day when Coinbase announced the launch of their wrapped Bitcoin cbBTC on Base and Ethereum, which means could that be money long-term? What could be money long-term with the Ethereum ecosystem? And will ETH be challenged as money within its ecosystem, the same as Solana would be long-term? These are important things to understand, as I know that everybody listening to this is holding big bags in Ethereum and Solana and likely some other L1s as well. Before we jump into today's episode, we need to take a quick minute to hear from our fantastic sponsors over at Gemini and Kelp DAO.
Discover Gemini, the US-based exchange built for new and advanced traders. As a special welcome gift, they are offering new customers $15 in Bitcoin just for trading. At Gemini, security is a top priority. As a licensed full reserve exchange and custodian, your assets are well protected. Plus, they offer cutting-edge security features like passkeys to keep your account safe. This exchange is setting the standard for compliance and innovation so you can trade with confidence. Head over to gemini.com/milkroad and start trading today to earn your $15 in BTC. Sign up now and get ready to join the trading fun.
Get ready because your reward farming game is about to level up. Introducing Gain, powered by Kelp, your degen concierge. Gain is an automated vault launched by Kelp that maximizes rewards for ETH users. It offers one-click access to airdrops and points from leading L2s like Linea, Scroll, Karak, and more. Here's how it works. Head over to milkroad.com/kelpgain and spot airdrop gain. Get a complete overview of how your assets are deployed and the rewards and points you stand to gain. With just a few clicks, deposit ETH or SETH or liquid staking tokens into the smart vault. That's it. The best part, once you deposit, you're issued a liquid token, AgETH, enabling you to participate in DeFi on Pendle, Spectra, Lyra, Splice, and others. Gain is already live and you can go check it out for yourself today. Just head over to milkroad.com/kelpgain and get started. Kyle, what's going on? Welcome back to the show. Exciting follow-up today on the episode we released on Wednesday, talking all about how you need to understand valuing L1s, particularly Ethereum and Solana, based upon a few key concepts. One of those concepts was that these tokens are needed as money within their ecosystem. This brought up a natural question, which is ETH going to have any competitors to being money within its ecosystem now and in the long term?
Yeah, I mean, I think so for sure. I think there's many different forms of money, right? You mentioned at the beginning of the show, there's money in form of payment. And I think Ethereum already has a competitor there and probably is a loser in that realm, which is the US dollar, right? Maybe in some world, 10, 20, 30, 40, I don't know, whatever years from now, fiat goes away and ETH and Bitcoin or whatever, something becomes like some sort of decentralized asset becomes money. But like that's not happening in this world, not for a very long time. And so I think ETH already loses there, but there's many other forms of money that other assets might be better suited for, or maybe it's not better suited, but just there's lots of competition. And so you mentioned Bitcoin is definitely competition to ETH as money. In the Ethereum ecosystem, it kind of has been because there already has been wrapped Bitcoin and now even further with Coinbase. And then there's like stable coins, which is obviously, I mean, that's just US dollars on chain. So there's some sort of money there that can compete with ETH. And I think this is the big question. And the reason I say this is a big question is if you look at Cosmos, the Cosmos ecosystem, it's kind of built what Ethereum has been trying to build with this L2 roll up. They have app chains, Injective, Akash, all these different things are different chains built on Cosmos. Cosmos has a token. No one talks about it. No one cares about it. It's called Atom. You wouldn't know that though, because why would you? Because when you use any of those other chains, you never use Atom. Atom doesn't have a way to sort of accrue value or really act as money in the Cosmos ecosystem. So oddly, it's like Cosmos has done what Ethereum's doing, and I think Solana will go the L2 route eventually as well, or network extensions. And Cosmos has already kind of shown like, hey, their token didn't become money, and so why would ETH, why would SOL? And I think that's the big question we'll try to answer today. And I don't know the clear answer here, but we'll definitely speculate and see what comes up.
Okay, let's start by explaining what is money within the Ethereum ecosystem. When do you need to use a form of money within the Ethereum ecosystem?
Yeah, that's the key, is in the Ethereum ecosystem. I think like, I don't know the definition of money exactly. I'm sure the things I'm going to say don't fit the like traditional definition of it, but I don't really care. Like, we're talking about this digital, ecosystem, this on-chain ecosystem. It's very different than like the physical world where money is basically just fiat. I think in a digital ecosystem that's on-chain, you have money as like the store of value. So just what asset do you want to hold that is like the least risk asset to just kind of hold, right? Where do you sort of like put most of your capital into? Okay, what do you use for payments? Of course, that's something on-chain, just like in the real world. But then you have things like collateral, right? A lot of what on-chain is using DeFi and using finance, and you need to use an asset. In the real world, oftentimes collateral can be either dollars. It can also be your house, right? Real estate. We don't really have any of that on-chain right now. And so collateral is definitely a form of money. If you think of the way that DEXs work, so like Uniswap, et cetera, even Coinbase and Binance, they all have trading pairs, right? You want to swap into USDC. Generally, there's like an ETH USDC or SOL USDC, depending on where you are, or USDC USDT, and you need that as a trading pair to swap in and out of different tokens. So that is kind of a form of money as well. There is gas money, of course, in these ecosystems, and you don't have this in the traditional world. But if you want to do anything on Ethereum or on Solana, you need to pay in SOL or you need to pay in ETH, right? In the traditional world, we don't really have that. Like if you want to use AWS, you don't pay an AWS coin, you just pay in USD, or there's no cost to transact or do things on AWS. Whereas in these ecosystems there is. And so gas becomes a form of money as well. So there's a bunch of different ways that you would use money. And I think assets like ETH and SOL will be used as money for some of these, and they probably won't be, or they'll be competed a lot for money in some of these. Gas is the one thing that's like for sure nothing can beat it. If the Ethereum ecosystem proliferates and wins, whether that's on Ethereum or on L2s, it doesn't really matter. Either way, people on ETH or L2s, they need to pay Ethereum in ETH, and there's just no way around that. And so like it has zero competition on that side of things. So like it automatically wins 1 point for money. The rest is kind of, let's see where things play out in terms of store value, in terms of collateral, et cetera, et cetera.
Right. So let's ask this hypothetical question, which is right now it is being used as money for those various items that you mentioned, but will it continue to be used for those items long term?
Well, let's look now. So like right now in this world, basically everything on Ethereum and on its L2s is using ETH as money. Right now, when you go to OpenSea and you want to buy an NFT, it's all valued in ETH. And so ETH is money in the NFT ecosystem on Ethereum currently, right? When you want to pay for something on Ethereum or on L2s, basically every L2 uses ETH as gas. Now, at some point that might change. We don't know. At some point it might. So far, there's basically no L2s that do that. But there's always talk of like, I don't know, why doesn't Optimism just use the OP token as gas? And then it no longer becomes money there. That could happen. Doesn't exist yet. And either way, even if they did do that, just because the users have to pay an OP, Optimism itself would still have to pay in ETH. So it still remains there. Collateral, if you look at the DeFi ecosystem, both in Ethereum and on the L2s, ETH is the number one asset used across everything, whether it's staking, whether it's taking out loans, whether it's borrowing, lending, it doesn't really matter. ETH is the money of DeFi and the collateral of DeFi by a long shot. There's no other asset even remotely close. If we talk of store of value, I guess in the Ethereum ecosystem, this would be ETH. A lot of people that use ETH or Ethereum, they just hold ETH. So call it what it is. Trading pairs has been mainly ETH for a long time, but it's starting to get eaten up by stablecoins. So we'll see where that goes. I would imagine it goes to stablecoins, and so I think ETH probably loses there. But let's see. The reason why it won up to this point was just because, like, again, it's the most used asset. Most people have it. It's the most trustless asset, meaning there's no risk in terms of like smart contract risk. And so like it just makes sense to use that. But I mean, USDC, USDT are becoming pretty big in this ecosystem. And so like kind of makes sense to just use them. It's just easier for people to understand and wrap their heads around. So we'll see what happens. I don't really know. And then again, payments. There was always, I mean, the whole idea of Bitcoin started from payments, right? That Bitcoin is going to be used as payments. Never worked out. It kind of just moved to store of value. It's probably not going to be payments. Lightning Network pretty well sucks. And then Ethereum, same idea. Everyone thought maybe we'll use it here, but you can see all the payments apps that are coming out and technology on that is using different stablecoins. And so I think ETH's not winning that either today. The future is a whole different world.
So before we talk about the future, just an obvious question here. What happens if ETH is not used as money for these things that you mentioned?
Yeah. Well, I think it goes the way of Adam, right? Basically, if no one uses it, there's no demand to buy it. And it sort of just, it kind of gets commoditized probably, which is a lot of people do think this is what happens maybe with L1s, because let's say maybe it has some fee revenue that keeps it deflationary or neutral, but then there's just no demand to keep buying it and keep using it. Then like, I think it reaches a point, you know, kind of like if you look at commodities today, like, I don't know, copper and every other commodity, they sort of all range in this, like, depending on where we're at in the business cycle, they sort of range, but they're all around the same market cap and they stay around that. They go up and they go down. Sometimes there's like a demand thing that spikes it, but they sort of all range around the same amount. And so it's just done that for like decades. And so like maybe that's just what happens with L1s if they don't actually become money and they just sort of sit there. There's always some demand again, because gas, it can't lose that. The question is, what is gas valued at? And that we obviously don't really know. There's also the idea of like security and staking. And so like there's some value there and some demand there, but at some point that probably runs out too. And so maybe it's just like, I think a lot of us think that L1 native tokens just will go up and up and up forever. And maybe that's not the case. Maybe it's like ETH is just worth, I don't know, $1 trillion or 2 trillion or fuck, what is it now? 300 billion. Maybe that's just what it's worth as gas. And that's just what it'll always be worth. And it's just, that's what it's going to be. So I think that's what happens. That's the like bear case, I guess, for these assets, because the bear case can't really be zero. Like if Ethereum ecosystem works or Solana ecosystem works, like these tokens can't really be zero because you do need it. There is demand no matter what for gas, right? And for security. So like it can't be zero, but how high can it go? Like it doesn't necessarily need to be unlimited. Like I think a lot of us think it is, unless it becomes money. Or I'm wrong about fees and MEV, and these things just print so much revenue and become so deflationary that it's like they just go to $1 trillion.
or the store of value becomes so strong long term that creates enough demand.
Yep, like gold at 17 trillion
gold
today or whatever.
Exactly. Like, which is also there's many ways. Okay,
that's the only hope for Bitcoin for the most part.
Thankfully, it's doing pretty well there so far. Yeah. Just look at the ETF so far this year. Okay, in order to understand if Ethereum will continue to be money within the Ethereum ecosystem, and I want to be clear to anybody listening or viewing this, you could say the same thing about Solana within their ecosystem or the same thing about any L1 token within their ecosystem. We're just using Ethereum as today's example. What does the world look like 10 years from now on chain? Let's paint a picture of that, and then let's have the conversation of, will Ethereum continue to be money for all of these items?
Yeah. Wow, what a beautiful world it's going to be 10 years from now on chain. I can't wait. But it's okay. Let's assume that the Ethereum roadmap works. Okay, we scale, L2s become the big thing. We're already kind of seeing it. We start to get everything on chain, right? We have billions of users, the whole world's on there. Most payments are on there, right? Most of the apps we use, whether that's Twitter and PayPal, et cetera, they're all integrated into ETH or an L2, or they have their own L2, whatever it is, doesn't really matter. But either way, most of the money in the world is flowing on top of Ethereum, okay? In terms of payments. You also have most of the equities. I think Apple, Nvidia, all these stocks don't exist on the New York Stock Exchange anymore. They're actually tokenized and exist on Uniswap. So I can swap in out of my ETH or my USDC or my Apple or my Google stock or my whatever stock. And not only that, because they're tokenized, those are also programmable. I can start to use those as collateral in DeFi, right? Instead on Athena, instead of me using ETH right now, or instead of in Maker, instead of me putting ETH to get my stablecoins, I can put Apple stock or I can put Nvidia stock, right? That'd be pretty cool. I want to make a payment. Shit, I don't know. Maybe I can start to pay with Apple and Nvidia, right? Instead of just dollars. Maybe stocks start to compete with dollars on the payment side. I don't know. So I think there's possibilities of all those things. And think further, probably real estate moves on chain as well. Now your house doesn't go on chain, but I mean the paper, the thing that I value goes on chain. And so like now there's some worth there and I can start to use it again as collateral or as something, right? So I think there's that. The other part of this world is that when there are, and let's assume again, the L2 ecosystem plays out, There's also like Ethereum is now kind of hidden. Most people, unless ETH proliferates as money, don't really know what Ethereum is, because we know what optimism is and Base is, and we know what Arbitrum is and Sonium, or whatever Sony's new L2 is, and all these things. That's the things that we interact with. Or maybe we don't even interact with those, but we interact with the apps that build on top of those, which could just be the PayPals and the Robinhoods and the Coinbases, et cetera, and they're just using crypto underneath. I'm not sure exactly how it's going to play out, probably a combination of both. And so I think in this world, you have billions, trillions of transactions that are happening all the time on probably millions of L2s, maybe. Some of those will be specific L2s for like one app, like PayPal or Robinhood's L2, and that's just where they do all their things. Or maybe they all just integrate into some of the L2s where they're integrating into like Aave and Maker and whatever apps exist then, but you're doing them in a much better UX, like in your PayPal app. Regardless though, we're still doing all the things we typically do in the world, like doing things with our finances, but way, way, way more, including like buying homes and selling stocks and buying stocks. And all of this is just programmable because it's all tokens. So it's all frictionless. And instead of like my stocks existing only on the New York Stock Exchange, I can start to bring that into other apps, right? And so I think that's a whole different world that I can't wait to get to. But what does that mean when I think about that? It means there's like right now, everyone's like, well, there's L2s and they have tokens. And so like that takes away liquidity from ETH. So that's bearish ETH. And in this world that I'm suggesting in 10 years from now, there's millions of tokens, quote unquote. And these again are equities, homes, crypto tokens, like whatever protocols. And so there's a lot of options of where am I going to put my liquidity and what am I going to use for collateral. And so this could be a bull case, could also be a bear case. It's like, why would anyone touch ETH or SOL in this world when I can hold Apple? So I don't know. It's a wild world, but I think it's gonna be quite interesting.
Let's go back to our list of items of how ETH is money currently within the Ethereum ecosystem. And let's look at each one of those in this new world, this fantastic, wonderful on-chain world 10 years from now. What are the other we don't know whether Ethereum will be money or be something else, but what are the other possibilities? So
let's go through. So gas fees, ETH wins there. So there is some value attributed to Ethereum no matter what. And if we have billions and billions of transactions across all these L2s, like probably it's that value of that gas fees is probably worth a lot more than it is today, I would assume. But again, I don't really know. The next would be collateral. Actually, let's go valuing things like NFTs. Probably not going to be ETH. I think it's probably what's just the main form of payment. And that's probably going to be USD because it's just the easiest. And especially if we're going to have stablecoins proliferate, which I think we will, I think stablecoins will be how we buy and sell NFTs. Why would we use something different? It makes no sense. If we value our coffee and our jeans and our everything else in USD, like why would we just make this one thing that NFT, which again, NFTs will represent tickets and all these other things. It's just going to be US dollars. So I think ETH's out the window there, most likely. Doesn't mean we won't pay for it in ETH. Just means we won't see the ETH symbol when we see the price of an NFT, right? You might pay for your NFT or your ticket to a concert, whatever, in your Apple stock or your Ethereum token or your Bitcoin or whatever. It doesn't really matter. I think payments will be seamless and it won't matter because I can pay in whatever token I want. It'll auto convert it into whatever token is that the merchant wants. But it's what do we actually perceive it and value it as? And I think it'll probably just be some sort of US dollar. And then you have trading pairs. I think, again, that probably goes to stable coins. And so the question really is collateral and store of value, right? What are people going to want to store lots of money in to take out leverage or to loan or to borrow? What asset are they going to want to use? Could be our homes, right? A lot of people, that's what we already use today. Doesn't exist on chain, but it definitely could be homes. The problem with something like that, and again, it could be stocks, but the problem with these is those exist in the real world. And so they're not perfectly on chain. There's like an aspect of it on chain that represents the value, but like something in the real world could happen and that could cause a problem for what it is on chain, right? Whereas something like ETH or Bitcoin, and the reason why like Bitcoin's store of value is so much better than gold, for example, is like you don't have to deal with anything in the real world. You don't have to move gold from like one place to the next, right? It's on chain and that's just it. So there's no custodial concerns. There's no third-party risks. It's just on chain if you hold it yourself and you self-custody it, right? And so that's why Bitcoin is pristine collateral. And I think ETH, the same thing in the Ethereum system, right? There is no real world issue that can happen that could screw up my ETH, right? Whereas someone could go burn my house and then I have this house as collateral on chain, but like what happens in that scenario, right? or like Apple shuts down. It probably won't, but like then what happens, So it's a bit weird when you're taking these real world assets and moving them on chain. Now, companies in the future could just launch natively on chain and they don't actually have a stock on the New York Stock Exchange. And so like a little bit less risk there, but it's still a company in the real world that has like a board of directors probably and people. And that just always means there's a little bit of concern and risk there. Whereas ETH is what I called in the last episode is trustless money on Ethereum. And what that means is there is no board of directors. There is no group that minted it and wrote the code to like launch the smart contract to have ETH. There is no multi-sig that like holds the treasury of ETH like every other asset on the Ethereum ecosystem currently. And so when I think of collateral, when I think of like store of value, I think that probably holds some value there. I really do. I think we'll probably use our homes and we'll probably use Apple and stuff. But I think there's something about this like trustlessness of ETH in its ecosystem where there's just no risk, no additional risk, plus it's yield bearing, right? It's generating yield from stake. I think there's something about that that makes it have sort of a premium to everything else, which is the same reason why we see Bitcoin as a premium. So anyway, that's sort of my thoughts there. But then also we have Bitcoin that's moved over to Ethereum. I mean, we've had this for a while. We've had wrapped Bitcoin for a long time. I think last cycle wrapped Bitcoin went to about 10 billion in TVL on Ethereum, which is pretty big. It sort of died down and hasn't done that well since. I think because of the concern around who's custodying it, there's smart contract risk, there's bridge risk, all that kind of stuff. And so again, it's hard for it to like go as big as something like ETH because it has that additional risk. But now you have Coinbase, which has launched their own version of wrapped Bitcoin. And if I think about Coinbase, Coinbase owns and currently custodies 10% of all the Bitcoin that exists. Okay, 10%. And you think of that, that's because their customers hold a bunch of Bitcoin, their institutional customers hold a bunch of Bitcoin. The ETFs are all custodied by Coinbase. And there's a bunch of exchanges in crypto that don't even custody it themselves. They use Coinbase. So like there's a lot of companies that even MicroStrategy uses Coinbase to custody its assets. So like Coinbase is holding and custodying a lot of Bitcoin. So it's trusted. And so we'll cbBTC, this new form, be enough where like, hey, this risk doesn't really matter because it's Coinbase. They already hold all the Bitcoin anyway. So if Coinbase goes under, well, it all goes under. It's all the shit anyway, like potentially. And so in this world, I don't really know. I think there is that benefit though that ETH has in its ecosystem that just no other asset has.
So give us the bear case and the bull case here of ETH as money within Ethereum or any L1 token as money within its ecosystem in the long term.
I think the bear case is that this trustless asset thing doesn't really matter. And look, people are listening right now that are like, probably like, why does trustless matter? And if you're putting $1,000 into collateral, like it probably doesn't matter. But if you're putting $1 billion in as collateral to take out some stable coins, like you're probably not going to do that with like a token that's, I don't know, worth $2 billion. You're not going to use your maker token to do that or whatever token to do that, or even wrapped Bitcoin to do that, because who custodies that? It's BitGo, but they're giving it over to Justin Sun. Like it's like a weird, you're not really going to want to just leave $1 billion in that. You'll hold $1 billion of Bitcoin, but if you custody it, right? Mm-hmm. Or Coinbase custodies it, maybe. But it's like, it gets weirder as you go down the risk curve. And so I think this trustless thing matters a lot for bigger amounts of money, right? And like when we think of big amounts of money now, it's probably tens of millions, hundreds of millions. That's not where, like when we have 10 years from now and everything's on chain, like we're talking hundreds of billions, maybe even trillions that people are holding and using. And so it's like, I think that it really matters there. So anyway, the bear case is that for whatever reason, that doesn't matter. Maybe we can make bridges and this like risk of other, let's call it real world assets or other assets moving into the Ethereum ecosystem and make that just like not risky at all somehow. The technology gets good enough that it's not really a big concern anymore. And so those proliferate. And then people are just like, I just don't really care about ETH then. It's hidden, don't really see it. People grow up not even knowing what ETH is, right? Everyone's on chain, but they just never even heard of Ethereum. They never heard of ETH, just like most people don't know the name of the protocol that runs the internet today. Everyone back in the 90s knows the name of the protocol because like if they were in the space, because that was like all the rage. That was all that existed. Once all the apps came and the browsers and the software, it's like you kind of forgot about that protocol. And maybe that's what happens with these L1s. And then the bear case, I think, to those is just they're whatever the value is of gas. And I don't really know what that is. But as I said in the last episode, they're always going to keep trying to make gas go cheaper and cheaper and cheaper to remain competitive. And so like there's definitely not a unlimited, ceiling to that. Like it's just at some point there is a ceiling, and I don't know how high that is. So I would say that's probably the bear case. Is that just like we start to use everything else as collateral? And then I think the bull case is that this sort of pristine collateral, the lowest risk asset in this ecosystem, does matter to something or someone, whether that's an institution, whether that's to AI. Remember, AI is going to be the biggest user of Onchain, not humans. And so like, what do they care about? Does AI really want to use something that exists in the real world that they don't have, that like humans have a say over? Like probably not. And so like, they'll probably want to use a trustless asset. Again, maybe it's not ETH, I don't know. So I think there is a world where people do care and they continue to use ETH as collateral, store value, et cetera. And the reason why I think that, outside of just this like trustless thing, is there's a long time between now and this world that you and I just dreamt of. And that means there's a long chance for ETH, the asset, to gain network effects as a legit asset, right? Ethereum has been around for however many years now, close to 10 years. And so it's got network effects as Ethereum, the ecosystem, the blockchain, right? And I'm pretty sure it's going to win out or be one of the winners because of network effects. There's so many developers, there's so much capital. People already know about it. The tools are better. It's easier to build on Ethereum and the L2s, et cetera, et cetera, et cetera. And so like, it's kind of got that network effect. And network effects is a big thing in technology and in finance, right? And so like, as a technology, I think Ethereum has that. ETH as an asset already does have network effects more than any other asset. And so Apple obviously has network effects too. But when is Apple legitimately going to come on chain and be part of the on-chain ecosystem? I don't know, 5 years from now, right? Before it's really integrated in, maybe 10 years from now. Like it's not going to be that soon. And so it means that ETH has another, I don't know, 2, 3, 4, 5, maybe 10 years before all these other real world assets and like the rest of the world gets integrated on chain. And I think that that is a big window for ETH to really establish itself as the dominant pristine collateral within DeFi. Right. And if it can do that while generating a yield, and it can start to secure not just Ethereum, but other blockchains and other protocols through restaking, like it's not just gas fees that it becomes the like it thing for. It's also the security, right? To secure Ethereum, but also to secure every other protocol via restaking. So, and then also be the collateral. And I think it's just got such a lead on every other asset, at least in the on-chain world. I find it hard to believe that any asset competes with that. Yes, there's a bunch of assets on chain today, Optimism or Maker or Aave, etc. But like, what are the size of these things? They're like 2 billion FDV, and they still have a bunch of unlocks over the next few years. It's like no one's going to use those assets seriously in the next few years until like they might gain in price and go to 20 billion or 40 billion or 60 billion. Still nowhere close to Ethereum. Still not millions and millions and millions of people holding this. And I still don't think people are going to go and use those as their main source of collateral when there's a bunch of unlocks and there's a team that is still pretty small that sort of runs it. So like, I just think the next few years are going to be the real determinant of can these L1 assets find product market fit in somewhere of this money spectrum. And I just think they have such a runway to do that probably they're going to figure it out. Maybe not. I could be wrong. Maybe Bitcoin just ends up running show and just like say goodbye to them, like starting today as Coinbase launches. We'll see. But like Bitcoin's been on Ethereum for almost 5 years now and it hasn't run away with it. So I just don't understand why it would change today.
Kyle, fascinating conversation today. Thank you so much for breaking this all down for us and dreaming up this future world, but then reminding us it takes some time to get there. And in the meantime, there's a lot of runway for ETH and other L1 assets to take market share and have those network effects. Everybody listening in, this is a longer episode, more around 30 minutes. I want to know if you guys prefer 30-minute episodes or if you prefer 20-minute episodes. We always want to make sure we're making the right episodes for you. So let us know. And as always, if there's something you want us to talk more about or dive deeper into, let us know in the comments or on Twitter. Thanks so much for joining us today. Have a wicked awesome day, everybody. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.